Now coming to the next subtopic in bills of exchange, which is very important, that is due date and grace period. Date of maturity is called due date and grace period. We give the 3 days grace to do the payment of the bill. Add 3 days grace period for making payments. So these two things are very important. We have to calculate date of maturity by adding the days of grace. While calculating the date of maturity, we have to add the date of grace. So while calculating the date of maturity, we have to see the 3 things. We have to know the 3 things. First one is, if a bill falls due in those months in which there is no corresponding day, then that end of the month will be taken as complete month, complete. For instance, suppose the bill is drawn on 30th January. Bill is drawn on 30th January and it is for 1 month. Bill is of 1 month. So the maturity date, 1 month means 30th January to 30th February, 1 month. But February is of 28. So we will take 28th February. Okay, plus 3 days. Plus 3 days. It means the due date will be 3rd March. Due date will be 3rd March. Is it clear? Suppose the bill is drawn on this date and as per the term of the bill is for 1 month. So we will start counting from 30th June to 30th February, 1 month. But February, we know that it is 28 or 29. So suppose it is 28. So 1 month will be completed on 28th. Thereafter we will add the days of grace, 3 days. So after 28th February plus 3 days, so due date is 3rd March. Maturity date will be 3rd March. This is number 1. If a bill fall due in those months in which there is no corresponding day, okay, there is no corresponding day, then that will be taken into as 1 month. Okay, from 30th January to 30th February, but February is of 28, so 28 will be taken plus 3 days, 3rd March. Next is, if the due date fall on Sunday or a public or gazetted holiday like 15th, 16th January, 15th August, 2nd October, it's a gazetted holiday, then 1 day before, the maturity date will be 1 day before. If the due date fall on Sunday or public or gazetted holiday, the due date will supposed to be 1 day earlier. 1 day earlier. Okay. Suppose due date come on 26th January. After adding the days of grace, it is 26th January. Then on that case, the due date will be on 25th January. Is it clear? 1 day earlier. If the due date has been declared as emergency holiday, then 1 day after, the due date will be, after adding the days of grace, the due date will be 1 day after. The due date will be supposed to be 1 day later. 1 day later means 1 day after. Suppose due date is on 15th October and 15th October government has declared as an emergency holiday. It's not a gazetted holiday or any planned holiday. It's an emergency holiday declared by the government on 15th October. Then if our due date of the bill comes on 15th October, then the due date will be on 16th October, 1 day after. 1 day after. So these 3 things we have to keep in our mind while calculating the due date, date of maturity. Days of grace is how much we are providing days of grace? 3 days. 3 days is the grace of days. Okay. Now we will calculate the due date. On the basis of the following information, calculate the due date of the bill in the following cases. There are various cases is given. Date of the bill, these are the date of the bill, period of the bill. Now we will find out the due date of the bill after adding days of grace. So first one is date of the bill is drawn on 1st February 2017 and this bill is of 2 months. This bill is of 2 months. So we will find out the due date. So 1st February to 2 months, we will move to 2 months. 1st February to 1st March, 1 month. 1st March to 1st April. Yes, 2 months is completed. From 1st February to 1st March, 1 month. From 1st March to 1st April, 2nd month. Plus 3 days grace. 3 days our grace period. So it's a 4th April. Due date is what? 4th April is due date. 4th April. 4th April. Year is what? 2017 is the due date. Is it clear how to calculate the due date? 4th April is the due date. Now see the next. See the next one. This one. 31st January is the date of bill. This bill period is 2 months. So we'll start counting 31st January to 1 month completed on which date? 1 month. 31st January to 28th February, 1 month. 28th February to next month March, 31st March, 2nd month, and 3rd month is 31st March to 30th April, 3 months. Is it clear? 31st January will move 3 months ahead. 31st January to 1 month, 28th February. 28th February to 31st March, 2nd month. 3rd month is 31st March to 30th April. So 30th April plus 3 days. 30th April plus 3 days. So 3 days of grace. When we add it, so this is May 3rd. May 3rd. 3rd May. 3rd May is due date 2017. Okay, is it clear? 3rd May. So this one is clear. Now come to 30th September. Date of bill is 30th September. This is for 2 months. So 30th September to 30th October, 1 month. September to October. 31st October, 1 month. 31st October to 30th November, 2nd month is completed. Now 3 days. After 30th November, 3 days is 1st December, 2nd December and 3rd December. Means 3rd December will be the due date. 3rd December will be the due date. Is it clear? This bill is of 2 months. 30th September to 31st October, 1 month. 31st October to 30th November, 2nd month. 30th November onward we will add 3 days. So 1st December, 2nd December and 3rd December. So 3rd December 2017 will be the due date. Now come to the next. 30th September, but it is of 3 months. So 30th September to 31st October, 1 month. 31st October to 30th November, 2nd month. 30th November to 31st December, 3rd month. Okay, now days of grace. We have entered in January, January 1st, 2nd and 3rd. So 3rd January will be the maturity period due date, but the year will be changed 2018, January 3rd, 2018. Is it clear? 3rd January 2018, 3 months. Now come to this 30th September 2017. It's a 3 days, 3 months. So 30th September to 30th October, 1 month. 30th October to 30th November, 2nd month. 30th November to 30th December. So 30th December, 3 months is completed. 30th December plus 3 days. So 3 days is 31st December, 1 day. Now 1st January and 2nd January. So 2nd January 2018 will be the maturity date of due date. 30th September to 30th October, 30th October to 30th November, 30th November to 30th December. 3 months is completed. Now 30th December we add 3 days. So 31st December 1 day, 1st January and 2nd January. Here it is 30th September 2 months. So 30th September to 30th October, 30th October to 30th November. And after that we will add 3 days. Then this is 3rd December. Okay. Next is your this 29th December. And the period is 2 months. So 29th December to 29th January, 1 month. 29th January to 29th February. So February may be 28. So it is completed plus 3 days. So after February, 28 February, okay, 2018, we will add 3 days. So it is 3rd March. Date will be 3rd March. 3rd March 2018 is the due date. 29th December to 29th January, 29th January to 29th February. February end at 28 or 29. So February is completed 2 months. Now add 3 days. March 1st, March 2nd and March 3rd. So March 3rd will be the due date. Now coming to the next. 31st December 2017, it is 2 months. This bill is of 2 months. So 31st December to 31st January, 1 month. 31st January to 31st February. February is not of 31st. February is of 29 or 28. So 2 months is completed. Thereafter we will add 2 days. So 31st January to 31st December to 31st January. 31st January to February end, 2 months is completed. Thereafter 3 days, 3rd March 2018, 3rd March 2018. Okay. Next is 15th July 2017. Date of bill is 15th July and it is of 60 days. So 60 days we will start counting from here. In July, how many days are left? In July, it is 16 days is left. August is of 31st day, 31 day in August. So total is 47 days. Now September, 13 days, 23 days if you will take, not 13 days. So it is 60 plus 3 days grace. Plus 3 days grace period. So September, it is of 60 days. So July 16 plus 31st 47 days plus September 13, it is total 60 days plus 3 days grace. So it is September 16th September is the due date. 16th September 2017 is the due date. 16th September is the due date. Next is 8.1. The date of bill is 27 January. It is of 1 month. So 27 January to 27th February. January to February 2016. 2016 is of leap year. It is a leap year. So it is 29 days. 29 days. It's a leap year. 2016 is leap year. So February is of 29 days. So 27th to 27th February, 1 day, February 27th, okay, 1 month is completed, plus 1 day 28 February, plus 1 day 29th February, February is completed, then March 1st. So March 1st will be the due date. March 1st will be the due date. 1st March 2016 is the due date. Is it clear? 27th January to 27th February, 1 month plus 3 days. 28 February, 1 day, 29th February, 2nd day, February is completed. Thereafter on March 1st, 3 days is the days of grace. These 3 days is the days of grace. So total it is March 1st is the due date. Okay, March 1st is the due date. So here one question is here, calculate the due date of the bill in the following case. Here the emergency holiday is 22nd September. These are the due date and these are the period of the bill. So come to the first one, 29th May. It is of 4 months. So 29th May to 29th June, 1 month, May to June 1, June to July 2nd, July to September 3rd, September to October. October is the 4th May. 4th May. May to June, 29th May to 29th May to 29th June. It's 1 month. 29th June to 29th July. It's a 2nd month. 29th July to 29th September. 3rd month. 29th September to 29th October. Yes, 4 months. So 29th May to 4 months you will start counting. 29th May to 29th June, June to July, July to it is August, August to September, August to September. So 29th September plus 3 days. September is of 30 days. September is of 30 days. So plus 1 day in September, 1 day in September. So it is 30th September plus 2 days of October. October 2nd. So it is 2nd October is the due date. But 2nd October is the gazetted holiday. So 1 day before. So it's a 1st October. 1st October 2017 is the due date. Is it clear? 29th May to 29th June, 1 month. 29 June to 29 July second month, 29 July to 29th August third month, 29th August to 29th September fourth month, plus 3 days. In September is of 30 days, so 1 day of September we have added, so it's 30th September plus 2 days. October 2nd is the gazetted holiday. Okay, it's a holiday, gazetted holiday, so 1 day before, so 1st October will be the due date. 1st October will be the due date. Now coming to the next one. The date of bill is 31st March, it's of 1 month, so 31st March to 30th April, 1 month. March to April is of 30th April, 1 month. Thereafter 3 days, so it's a 3rd May 2017, 3 days, 3rd May 2017. Next is 31st July, it of 60 days. So 31st July, in July it is, remaining days in July is 9. July is of 31st. So remaining day in July is 10. Okay. August is of 31st. So total it is 41. September 19, if you add it, then it is 60 days plus 3 days of grace. So September 22 will be the due date. September 22 will be the due date. July 21st, 10 days in July. August 31st, 41. September 19, so it is 60 plus 3 days. So 19 plus 3 days, 20, 21, 22. So here the September 2nd is the due date, but here emergency holiday is 22nd September is the emergency holiday. So 1 day before, so it's a 21st September 2017, 1 day before. In emergency holiday is on 22nd September and the due date fall on 22nd September. So 1 day before means 21st September will be the due date. Next one, this one, 21st July 2017, due date of the bill and period is, this one we have completed, 14th May and period is 90 days. So 14th May, in May is of 31st. So May month, remaining 17 days in May month is left. June 30, okay, July 31st, so total it is 78. August, if you add 12, so August is 90, completed 90 days plus 3 days. So August 15th August is the due date, but 15th August is the gazetted holiday. So 1 day before, so 14th August will be the maturity date. Due date will be the 14th August. Okay, 14th August is the due date. Now come to the next. 28 January 2016, it's a 1 month. So 28 January to 28 February. Okay, February is of 28. 29, February is of 29 because it's a leap year. So 28 January to 28 February, 1 month. In February, 28 February is the 1 month. In February, 1 day is left. Now it is 29th February plus another 2 days, for January. So January 1 and 2. So 2nd January is the due date. 2nd January is the due date. Is it clear? 2nd January, 28th January to 28th February plus 29th February. So it's a March. March 2nd will be the due date. March 2nd will be the due date. 2nd March 2016 is the due date. 28 January to 28 February 1 month. February is of 29 because of leap year. 2016 is the leap year. So 1 day in 29 plus 2 days, March 1st and March 2nd. So March 2nd 2016 is the due date. Now coming to the next, 31st January 1 month. So 31st January to 31st February. February is of 28. February is of 28 or 29. 29. So 1 month is completed. Thereafter we will add 3 days. So it's a 3rd March 2016. 3rd March 2016. So in this way we calculate the due date, that is called maturity date, taking into account the days of grace 3 days, taking into account emergency holiday if it is there, then 1 day before, and if it is gazetted holiday 1 day after. Now see the 3 things, 3 type of bill. Bill at site, number 1, bill after date, bill after site. What's the difference in between these 3? So come to the bill at site. Bill at site means payable on demand. Whenever the drawer present the bill before the drawee has to pay the amount. There is no time for payment is mentioned in the bill. No time for payment is mentioned in the bill. So here there is no grace period. Days of grace is not over here in bill at site. The day the drawer present the bill before the drawee has to pay the amount on that day immediately. This is called bill at site. In the bill of site there is no payment period is mentioned that this bill is for 2 months, 3 months, 60 days or 90 days or 15 days. So payable on demand. Whenever the drawer present the bill for payment before the drawee has to pay the bill immediately. So in this type of bill no payment period is mentioned, so days of grace is not going to consider over here. Bill after date. So in this the payable at a fixed period after adding the days of grace. This is our bill after date. After date means the date on which the bill is drawn. Suppose bill is drawn by the drawer on 1st January and it is of 1 month. So we start counting from 1st January to 1 month. Will counting start from 1st January. So 1st January to 1st February, 1 month is completed plus 3 days. 4th February is the due date. So bill after date means payable at a fixed period. Because the date is mentioned, term of the bill is in the bill it is mentioned that, clearly mentioned that this bill will be paid after 2 months, 3 months, 90 days, 15 days, whatever it may be. So we'll add the days of grace, then we find out the due date, date of maturity. Bill after site means when the drawee accept the bill, from that day the counting start. From the date of acceptance. When the bill is drawn it is not important. The important is what? Date of acceptance. Bill may be drawn on 1st January. Suppose bill is drawn on 1st January. But bill is accepted on 4th January. So from 4th January to 1 month, suppose bill is of 1 month, so 4th January to 4th February plus 3 days of grace means 7th February will the due date. So bill after sight, here it begins after the date of acceptance, when the drawee accept the bill. From that day the period counting start. For days of maturity, for maturity period, we start the counting from the date of acceptance. Okay. So when the bill is accepted by the drawee, from that day we start the counting for the due date. So period begins means maturity periods, counting of the maturity periods begin from the date of acceptance. So this is the difference between bill at sight, bill after date and bill after sight. At sight, after sight. At sight means when the bill is presented by the drawer before the drawee, on that day the drawee has to pay the amount, there will be no grace period. And in this type of bill, no terms and condition is mentioned, it is bill at sight. Okay. And bill after sight means when the drawee accept the bill, from that day we start counting to calculate the maturity period. Calculate the maturity, date of maturity. Now see the journal entries in the books of drawer and drawee. Suppose A sold goods to B for rupees, sold goods to B on credit for rupees 10,000. This is the transactions. A sold goods to B on credit for rupees 10,000. So in the books of A is the who? A is the seller. So seller books, the entry will be B's account debit to sales account. Yes, B's account debit to sales account, being goods sold on credit. In the books of B, B is what? B is the purchaser. B is the purchaser. B do the entry of this sales, purchase account debit to A's account. Yes, purchase account debit to A's account 10,000. He has purchased the goods. He has sold the goods. So B's account debit to sales account 10,000, and the purchaser will do the entry purchase account debit to A's account. When the goods sold by A to B, so in the books of A, B account debit to sales account, and for him it's a purchase. He has purchased the goods from A, so purchase account debit to A's account. Okay. When the A draw a bill on B, and B accept it, then entry will be bills receivable account debit to B's account. When the bill is drawn by A, which is accepted by B, for him it is a bills receivable assets. For the drawer it's become a bills receivable assets. So bills receivable account debit to B's account. And when the B accept the bill, it become the liability for him. So he will do the entry A's account debit to bills payable account. Bills payable account. For him it's a bills receivable account debit 10,000. Suppose bill is drawn of rupees 10,000 over B, and B has accepted it. So bills receivable account debit to B account, and for him it's a A's account debit to bills payable account. On the due date, bill is duly honored by B. B has honored the bill, means bill has did the payment. Then entry will be cash account debit or bank account debit, cash or bank account debit to bills receivable account. Cash or bank account debit to bills receivable account. Here bills payable account debit to cash account or bank account. as per the information given in the question. Is it clear? When we do the sale, the entry for sale is this. When we purchase it, purchase entry is this. When the bill is drawn, which is accepted by acceptor, bills receivable to the acceptor's account. Here the A's account debit to bills payable account when the bill is accepted by the purchaser, by the drawee. And when the amount of the bill is received on the due date, cash account debit, bills receivable account debit, cash account debit to bills receivable. And here when the payment is done, bills payable account debit to cash account or bank account. Okay. Now see one question based on bills of exchange. So note down the question first. I am giving you the pause the button and note down the question. On 1st January 2019, Ajay sold goods to Bhushan for rupees 50,000. Ajay draws a bill of exchange for 2 months for the amount due with Bhushan, accepts and return it to Ajay. Bhushan met the bill on the due date. Past journal entries in the books of Ajay and Bhushan both. So we'll do the entry in the books of Ajay. In the books of Ajay. In the books of Ajay. Ajay is the drawer. Ajay is the drawer. Ajay sold goods to Bhushan. Ajay is the seller as well as the drawer. And we'll do the entry over here in the books of Bhushan. In the books of Bhushan. Bhushan is the purchaser. He is the drawee. So the first entry will be on January 2019. Ajay do the entry over here on January 2019, 1st January. Bhushan account debit. Bhushan account debit to sales account. Being goods sold on credit. Whereas the Bhushan do the entry for the same transaction, purchase account debit to Ajay account on the same day 2019 January 1st. Bhushan do the entry purchase account debit to Ajay account, whereas the Ajay do the entry Bhushan account debit to sales account. Amount is what? Amount is 50,000. It is 50,000. 50,000 in debit and 50,000 is in credit. Is it clear? You can write the narration easily. Being goods purchased on credit. Here narration will be being goods sold on credit. So, Ajay draw a bills of exchange for 2 months. For the amount due with Bhushan, accepts and return it to Ajay. So on this date, Ajay draw a bill for 2 months which the Bhushan accept it. For Ajay it is a bills receivable account debit to Bhushan account. Bhushan account. Bills receivable account debit to Bhushan account 50,000, and whereas the Bhushan do the entry in his book on January 1st, Ajay account debit to bills payable. Bills payable account 50,000. This bill is of 2 months. So after 2 months, the bill is duly met by Bhushan. So January 1st to 2 months, January to February 1st, February to March 1st, plus 3 days, March 4 is the due date. Cash account debit or bank account debit to bills receivable when the amount of the bill realized by Ajay. And here on March 4th, the entry will be bills payable account debit to cash account. Amount of the bill is paid by Bhushan to Ajay on due date. Bill is duly honored by Bhushan on the due date. So this is the entry in the books of Ajay, entry in the books of Bhushan. Is it clear? Narration you can write it. Here the bill is drawn over the narration in the second entry will be here the bill drawn over the Bhushan which is accepted by him of being the bill drawn for 2 months on Bhushan which is accepted by him, being the amount of the bill realized on the due date. Okay. Now see the next question. Discounting of the bill. Bill may be discounted. Bill may be discounted by the debtors before the due date. You know, bill may be discounted. If the bill is discounted by the debtor, then entry will be bank account debit, discount account debit to bills receivable. Before the due date, that bill may be discounted by the drawer. So if the bill is discounted, then entry will be bank account debit, discount account debit to bills receivable. See one question related to discounting of bill. Discounting of bill. So question is, on 15th February 2019, X sold goods to Y for rupees 60,000. On the same day, Y accepted a bill drawn upon him for 3 months for rupees 60,000. X immediately discount the bill at 15% per annum at his bank. Y met the bill on the maturity. Make journal entry in the books of both party. So both parties is X and Y. In the books of X I am doing over here, in the books of Y. Journal entry in the books of X, in the books of Y. Here X is the seller. X is what? He is the seller or the drawer. And Y is who? Y is the purchaser. He is the drawee. He is the drawee. So when X sold the goods to Y, so entry will be Y's account debit to sales account. This will be the first entry. Y's account debit to sales account. Date of sale is given 29th on 2019. Date is February 15 is the date. February 15 is the date. So on the same day here in 2019, February 15, the Y do the entry purchase account debit to X account. To X account, amount is how much? Amount of is 60,000 is the amount. 60,000. X sold goods to Y for rupees 60,000. So this is the entry done by X and Y in their own book. X will do Y account debit to sales account. X will do purchase account debit to X account. This bill is immediately discounted with the bank. Immediately discounted with the bank. Okay. So first the bill is drawn by X over Y which is accepted by Y. Okay. Y accept the bill. So here bills receivable account debit to Y's account. When the Y accept the bill, 60,000 bill is accepted by Y, and here he will write on February 15, when he will accept the bill, the entry will be X account debit to bills payable account. Bills payable account when he accept the bill. Is it clear? X account debit to bills payable account. When this bill is discounted, so bank account debit, discount account debit, when this bill is discounted, discount account debit to bills receivable. So bill amount is 60,000 and this bill is discounted. So calculate the discount amount. 60,000 is the amount of the bill. Rate of discount is given in the question, that is 15% per annum, and the term of the bill is 3 months. So calculate the discount for 3 months. 3 upon 12. 3 upon 12. Okay, so 15 into 15, 225 plus 10, 2250. 2250 is the discount. It means in bank 0, 5, 7, 7, 5, 57,750 will be in the bank. Okay. There will be no entry passed for the discounting of the bill in the books of the purchaser, in the books of the drawee. Drawee is not going to do this entry. This entry will only be done by the drawer. This entry of discount will be only done by the drawer. This entry is not going to done by the drawee. Means why? The next is, on the due date, the bill is duly honored. As the bill is transferred to bank, so bank will get the amount of the bill. On the due date, the entry of collection is not going to done by the drawer. But here on the due date will be, this bill is of 3 months. So February 15, March 15, April 15, May 15. May 15 plus 3 days, May 18 is the due date. On the due date, the drawee do the entry bills payable account debit to cash account or bank account 60,000. Drawee do the entry for honoring the bill. Bill has been honored by the drawee on the due date. So bills payable account debit to cash account or bank account This amount will be paid by the drawee to whom? To bank, because bill is already discounted with the bank by the drawer. So bill is in the hand of bank, not in the hand of drawer on the date of maturity. So drawer will not get the amount of the bill, because bill is already discounted by the drawer from the bank. So bank will get the money from the drawee on due date. So on May 18, bills payable account debit, this bill will be recovered by the bank, by the drawee from the bank. Bills payable account debit, this comes in the business, and the payment will be done. Okay, and the payment will be done. Is it clear? Now we'll see the one question based on endorsement. When the bill is endorsed, means transfer by the drawer to the creditor or to the third party. Okay, before the due date of the bill may be endorsed, may be transferred by the drawer to the creditor or to the third party. Then what entry will be done? So the question is, B owed rupees 20,400 to A. B owed rupees 20,400 to A. On 15th January 2019, he accepted a bill for rupees 20,000. The 2 months, for 2 months drawn by A. So in the books of A, we'll do the entry in the books of A, and in the books of B. We'll do the entry in the books of A and in the books of B. On 15 January 2019, he accepted a bill for rupees 20,000 for 2 months drawn by A in full settlement of his debts. On 18 January 2019, A endorsed the bill to his creditor C. The bill was duly made on the due date of maturity, past journal entry in the books of A, B and C both. 3, A, B and C. Journal entry in the books of A, B and C. So first of all we'll do the entry in the books of A and then B. So on 15 January 2019, on January 15, 2019, 15th January 2019, first entry will be B's account debit, 20,400 to bills received. First entry will be bills receivable account debit, 20,000, discount account debit, discount allowed, account debit because it's in full settlement, it is 400 to B account, to B's account, 20,400. Okay, this is the first entry. This bill is transferred to A transferred this bill on 18 January. On January 18, this bill is endorsed to C. So C's account debit. This will be transferred to C's account debit to bills receivable. This bills is transferred to C. So bills goes out from the business, transferred to C. Okay. These two entry we will do in the books of A. On the due date, here it is given on the due date the bill was met by B. So this amount A will not receive that amount because bill is already transferred to C. So C will get the amount of the bill on due date. Now here entry will be A's account debit to bills payable account, to bills payable to discount received. Discount received. Here he is getting discount because instead of 20,400 he has accepted the bill for rupees 20,000. It means 400 is the discount received, and he will not do the entry for endorsement. This entry will be on January 15, 2019. On the due date, this bill is of 3 months. This bill is of accepted a bill for 2 months. So January 15 to 2 months, January to February 15, February to March 15 plus 3 days, March 18 will be the due date. On this due date, he will do the payment, bills payable account debit to cash account. This 20,000 will be paid by B to the bearer of the instrument. And who is the bearer of the instrument? C is the bearer of the instrument. So that amount is paid to C. So bills payable account debit to C account. These two entry will be done in the books of A and B. If you are talking about in the books of C, entry in the books of C. So entry in the books of C will be in the books of C, C is the endorsee. So on January, on which date it is endorsed? On January 18. So 18 he will write bills receivable account debit to A's account, to A's account, and on March 18 he will write cash account debit to bills receivable account in the books of C. So it is 20,000, 20,000 and 20,000. So in the books of C, it's a bills receivable. When this bill is transferred to C, so C will write bills receivable account debit to A's account, and on the due date he will get the amount. So cash account debit to bills receivable account. Is it clear? This is the entry for endorsement. This question is based on endorsement of a bill. Bill may be endorsed by the drawer to his creditors. Okay, so here A has endorsed the bill to his creditor C. So When he'll get the bill from the B, bills receivable account debit, discount allowed account debit to B account, that is the 400 is the discount allowed because the amount bill accepted by B in full settlement of his account. Then this bill is endorsed to C, so C account debit to bills receivable. On this date, the C will do bills receivable account debit to A account, and on the due date, the amount will be received by C from B, so cash account debit to bills receivable. And here the B will do the entry as account debit to bills payable to discount received. For him, it is an income. It's an income. And on the due date, he will do the payment bills payable account debit to cash account. Now see the another question. Here we will see all the different circumstances, all the different cases when the bill is retained by the drawer till maturity, means due date, when the bill is discounted by the drawer from his bank, when the bill is endorsed, means transfer by the drawer to the creditor or to the third party, and when the bill is sent by the drawer to bank for collection. Bill is sent by the drawer to his bank for collection of the bill. Under the bank serves as an agent, do the function of an agent. So when the bill is given to the bank for collection, then what entry we will do in the books of the drawer. So the question is, X draws on Y a bill for rupees 4,000 which was duly accepted by Y. Y met the bill on the due date. So what entries will be passed in the books of X and Y under each of the following circumstances? Circumstances number 1, if X retain the bill till due date, retain the bill till due date. Second, X discount the same with his banker, paying 100 rupees for discount. Third, X endorse the same to creditor in full settlement of date rupees 4,080. And last one is X send the bill to his banker for collections. So we'll see one by one in the books of X and here in the books of Y. Okay. In the books of X, we'll do the entry this side, and the books of Y, I am going to do the entry that side. So first is X draws a bill on Y and Y duly accept it. So for him it is bills receivable account debit to Y's account. Bills receivable account debit to Y's account. Amount of the bill is 4,000. Amount of the bill is 4,000. Okay, first entry is clear. X draws a bill on Y and Y duly accept the bill. So case number 1, here start with the case number 1. Case number 1. Number 1 is X retain the bill till due date. When the X retain the bill till due date, then X will get the amount of the bill on due date. So cash account debit to bills receivable. Cash account debit to bills receivable. This amount will be received by A. Bills goes out from the business and cash comes in the business in case number 1. In case number 2, this is the common entry in all cases. First one is the common entry in all cases. So case number 1. In case number 2, X discount the same with his banker. So for discounting, he will do the entry bank account debit, discount account debit to bills receivable. So bank account debit, discount account debit to bills. Discount is 100 rupees. So in bank it will come 3,900. Discount is 100. So in bank 3,900 will be debited. So bank account debit, discount account debit to bills receivable. Now this bill is honored on the due date. So the drawer is not going to get this amount because bill is already discounted, bill is transferred to the bank. Bank will get the amount of the bill on the due date. So on maturity, the drawer is not going to do the any entry for that because drawer is already discounted this bill. So this is the second. Third case, case number 3. Case number 3, X, if X endorse the same to his creditor Z in full settlement of his debt. So when the X endorse this bill to Z, so Z's account debit 4080 rupees. In full settlement of that, he has transferred the bill, X has transferred the bill of rupees 4000. So rest is your discount received. Discount received is how much? 80 rupees is the discount received. So Z account debit 4080 to bills receivable which is transferred by X to Z is 4000. After this entry, this entry will come. After this entry will come. Okay, endorsement entry. So bill is transferred and this much the discount the X has earned. Here also in the third case also, the bill on the due date, when the bill is honored by the drawee, that entry is not done by the X because the bill is transferred to Z. So Z will get the amount of the bill on maturity. Next one is fourth case, case number 4. When the bill is sent for collection, bill sent for collection. When the bill sent for collection, the entry will be bills sent for collection account debit, sent for collection account debit, $4,000 to bills receivable 4,000. Okay, when the bill sent for collection. And on the due date, when the bill is honored by the drawee, on the due date entry will be bank account debit to bills sent for collection. Bills sent for collection, bills sent for collection will be credited. Bills sent for collection will be credited. Bank account debit to bills sent for collection, this 4,000. Is it clear? Bank account debit to bills sent for collections. So in first case, this entry is common in all the cases. So first entry, thereafter in case 1, second entry. In case 2, this is the first entry, second entry is this. In third case, first entry is this, thereafter this entry. In fourth case, first entry is this and these two entry. Okay. But in all these circumstances, in all these 4 circumstances, the drawee will do, purchaser will do the same entry in all the cases. Bills payable account debit to cash account. When he will pay the amount, first of all, when he accept the amount, X account debit to bills payable. When he accept the amount, that is 4,000. When he has accept the bill, when the drawee accept the bill, so X account debit to bills payable, and on the due date, when the bill is mature, bill is duly honored, so bills payable account debit to cash account when the bill is duly honored by drawee, so bills payable account debit to cash account. This entry will be done whether it's in case number 1, case number 2, case number 3 and case number 4. In all such cases, all these cases, 4 cases, this entry will be done by the drawee, because drawee is not at all concerned what the drawer is doing with the bill, whether he has discounted the bill, he has retained the bill, he has endorsed the bill, or he has sent the bill for collection. Drawee is not at all concerned with all these things. Whosoever come with the bill on the due date, drawee will do the payment. Whosoever come with that bill, drawee will do the payment. So if the drawer will come, then also the cash account credit. If the bank will come, then also cash account credit. If the endorsee will come, then also the bank drawee has to pay the amount. So the entry is bills payable account debit to cash account in all the cases. Okay. Now see another question based on bills of exchange. X made the following sales to Y. X made the following sales to Y. On January 17, 20,000 sales. On January 18, on January 8, sales is 25,000. On January 10, sales is 10,000. On January 15, sales is 40,000. For all the sales, X drew bill on Y payable after 60 days. Bill drawn on January 1 was retained by X with him till due date. Bill drawn on 8th January was discounted by X from his bank at 9% per annum. The bill drawn on 10th January was endorsed by X to his creditor for full settlement of rupees 10,400, and on March 12, 2017, X sent the bill drawn on 15th January, means that this is the fourth one, to his bank for collection. All the bills were made by Y on the due date. Pass journal entry in the books of X and Y. Prepare Y's account in the books of X and X account in the books of Y. So start with the X. First I am going to start with the X. Okay, start with X. So first entry will be on which date? January 2017. You see, in 2017 January 1st, first entry will be Y account debit, Y's account debit to sales account, on January 1st 2017. Okay, Y account debit to sales account. This is the first entry. Next the bill is drawn. So here on January 1st, bills receivable number 1 account debit to Y's account. Amount of the sale is 20,000. This is the sale of rupees 20,000. Okay, 20,000. So first bill which is accepted by Y on this date is bills receivable number 1 to Y's account. Second date sale is January 8 is the second date of sale. So Y's account debit to sales account on January 8 is 25,000. Okay. And on January 8, bills receivable number 2, I am giving number 2 to this bill, account debit, okay, to Y's account. It is 25,000, which is accepted by Y. Second bill, as it is given in the question, first bill is retained by the drawer, but second bill is discounted. The bill drawn on 8 January was discounted by X from the bank. So we will do the entry for discounting, bank account debit. Now the second bill, the sales and the second bill is received. Now next sales is on January 10. What about the second bill? Second bill is discounted or what? Second bill is discounted. Bill drawn on January 1st was retained and bill drawn on January 8 was discounted. This bill is discounted from the bank. So bank account debit, discount account debit to bills receivable. This is bills receivable number 2. So bills receivable number 2 is 25,000 and it is discounted with the bank at the rate of 9%. So at the rate of 9% per annum. So it's a 60 days bill. I am considering 360 days in a year. So 375 rupees. So in the bank 24,625 rupees will be in the bank. Now on January 8 again the third sales. So wise account debit to sales account on January 10. On January its date is 10. Wise account debit to sales account, it is 10,000. Goods sold to Y for rupees 10,000. Third bill is, and we accept the bill. The bill is accepted by Y on this date. So bills receivable number 3, account debit to Y's account, 10,000. 10,000. Okay. This bill is bills. Third bill is endorse. To whom? To endorse to his creditor Z account debit to bills receivable number 3 to discount received. Okay, to discount received. So this bill is of 10,000. We have to pay to the Z 10,400 and the bill of rupees 10,000 is given to Z in full settlement of his account. So 400 is the discount received. Is it clear? 400 is the discount received. After that come to the fifth bill, January 15. The fourth sales is wise account debit to sales account. The fourth sales is of rupees 40,000. Fourth sales is rupees 40,000 on January 15. And fourth bill is sent to bank for collection on March 12. Okay, now come one by one. This bill, first bill, is retained by X till the due date. So the amount of the bill will be realized by X on the due date. This bill is of 60 days. So 60 days we start calculating from January 1st. January is of 30 days. February 28 days. Okay, it is 58 days is completed. March 2nd plus 3 days is a grace period. So March 5. On March 5 the amount of this bill will be realized. So cash account debit or bank account debit to bills receivable number 1. This bill 20,000 bill on the due date, this bill amount will be realized by X from Y. Y has honored the bill on the due date. Second bill is discounted, so this bill amount will be realized by bank. Bank will get this amount of the bill. Third bill is discounted, so third bill is also realized by, or the amount of the bill will be received by Z, endorsee. Now this bill, after that we have to do one more entry for the bill number 4. here on January 15, bills receivable number 4 account debit to Y's account. This is for 40,000 this bill. Thereafter on March 5, bills receivable number 4 account cash account debit to bills receivable number 2. This one, bills receivable number 1, sorry, bills receivable number 1, this amount on due dates is a 60 days. So January 30 days, February 28 days, 58, March 2 plus 3 days of grace. So March 5 will be the date of maturity. Okay, this bill is discounted on which date? This bill is discounted, sent for collection on March 12. On March 12, this bill is sent for collection. So bills sent for collection, account debit to bills receivable number 4. It is sent for collection. This 40,000 bill is sent for collection. And on the due date, counting the due date of this bills receivable number 4, 60 days, January 15. So in January remaining days is 16, February 28. Okay, it is 30, 44. March, you take it 16 plus 3 days means March 19. On March 19, bank account debit to bills sent for collection will be credited. Bills sent for collection will be credited 40,000. This is the entry we have done in the books of Acts. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 entries are in the books of Acts. Now we will do the entry in the books of Y. Now we will do the entry in the books of Y. So first entry will be on 2017 for purchase. Purchase account debit to X account. Purchase account debit to X account 20,000. Thereafter on January 1st, when he has accepted the bills, X account debit to bills payable 20,000 when he has accepted the bill. Next is on January 8, again entry for purchase, purchase account debit to X account. Okay. This amount is 25,000. Again on this date he will do the entry for the another bill. This is the bills payable number 1. X account debit to bills payable number 2, 25,000. X account debit to bills payable number 2. X account debit to bills payable number 2. Okay. Now on March 10, next entry is on March 10. March 10, purchase account debit to X account. Amount is how much? On March 10, it is 10,000. Purchase is of rupees 10,000. For that the fourth bill is accepted. Fourth bill is here. On March 10, X account debit to bills payable number 3, 10,000. Okay. On January 10, next is on January 10, another sales is, a purchase is purchase account debit to X account, and when the bill is accepted, X account debit to bills payable number 3. The next is on January 15, purchase account debit to X account, it is 40,000, and when the bill is accepted, so X account debit to bills payable number 4, 40,000, 40,000 bills payable number 4, X account debit to bills payable number 4. After that, next entry will be for this when the bill is honored, on which date? It's a 60 days. So 60 days start from January 30, February 28, so it is 58 days, March 2 plus 3, on March 5, 2017, when he will pay the first bill, bills payable number 1 account debit to cash account, we will do the entry 20,000, bills payable number 1 account debit to cash account for this. Then January 8 means January remaining days are 23 in January, so it is 51. So March 9, 60 plus 3, March 12. On March 12 due date, bills payable number 2 account debit to cash account on March 12, it is 25,000. This bill is met on due date. Okay, January remaining days after January 8 is 23 days, February 28, so total is 51, March 9, 60, it becomes 60 plus 3 days, so March 12. Now coming to March 10, March 10 means remaining days is 21, so it is 49, means March 11, 60 plus 3, March 12 is the, March 14 is the due date, so March 14, bills payable number 3 account debit to cash account, amount of the bill is 10,000. We are started honoring the bill. Bill is duly made by Y on the due date. Now coming to the January 15. So January remaining days are 16, February 28. So it is 44. So March 16 it becomes 60 plus 3, March 19. So on March 19, bills payable number 4, account debit to cash account, 40,000. 40,000. Is it clear? So total number journal entry in the books of Y is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, these are the total journal entry in the books of the drawee, means in the books of the purchaser, means in the books of Y.